Today, I want to share with you how you can go about growing an account, meaning compounding a small size account over a period of time, whether it's trading the micro MES E-mini futures, okay, or the full-on E-mini futures. You can do either or, and it doesn't just have to be this particular market as a whole. You have the NASDAQ, you have other markets or instruments you can trade, like commodities, grains, whatever you have interest in as far as the contracts you want to trade. It's a simple strategy all surrounding supply and demand, where we're marking up zones off of a higher and lower base chart. For me in particular, I'm trading range charts. Some of you may trade time charts, maybe tick, volume, whatever is working for you, stick with it. The way I go about doing and trading, in particular, the micro E-mini S&P 500 is, or even the NASDAQ, I start with the higher chart. I'll identify my zone markups, whether they are supply or demand, but I have to understand which way the market is moving first. I've got to be able to understand the structure, the tone in which the market is moving in. If it's very bullish, I only have interest in trying to take opportunities going long, and vice versa if the market is bearish to the downside. So how to turn a small account and grow it over time is a very simple process if you understand and have a good systematic strategy that allow you to do so, okay? I would give myself comfortably about 90 days or 3 months, especially if you have, definitely a smaller size account, and you're looking to, to grow it. I talk about in lots of videos how you can take $500, $1,000, $1,500, trading the micro E-mini futures over a period of time from month to month, and you can grow that account. So pretty much in the first month, let's say you start off with $500 or even possibly $1,000, you could double that amount. The second month, double that amount. And third month, double that amount. So it starts becoming a snowball effect to where over time you are making more profits as time goes along. Compounding is the key. That should be your goal, and trading in the future markets each and every day, and taking, payouts and withdrawals over time, but a certain percent, and leaving the remaining part in your brokerage account. So that way you can, trade more, not say trade more as far as number of trades, but be able to possibly in turn trade more contracts if you choose to do so, okay? Now the strategy works like this. All you need to do is, I'm using my the E-mini S&P 500, not the micro version, but just think of it as the same, okay? It doesn't matter. The charts are universal in a sense, okay? Whatever you see on one chart, primarily like here on the ES, you're going to see on the MES, okay? Pretty much, okay? It may move a little bit slightly different, but still, what I want to show you is just basically how it works. Is we want to identify on a higher chart the direction. Form your bias. What is market structure looking like on your higher chart, okay? Again, whether that be a time-based chart, tick, volume, for me it's range. But as long as the market is making these higher highs and higher lows to the upside, and I'm looking for pullbacks to key areas of demand. Now, let's say we get a dip lower where it starts to break to the downside, like right here. We get a low, lower high, and we got this movement to the downside. Now, the market is basically shifted or reversed it from being bullish to bearish to the downside right here, right? So now we're in between an area where we have say for example, a high and a low right here. This would be a final low before the market starts pushing back to the upside. Okay. Again, this is on the MES, the micro E-mini S&P 500. We're talking about, sustaining profits and growing an account over a period of time. You can do this. So if I have a high marked here and a low marked here, but then the market starts to make swings back to the upside, okay, where it's making waves, highs, higher lows, higher highs, higher lows, and makes a high right here. Okay, now we are in between this high here and this low here, but this is a high here as well, okay? That's a high. The market just made a high. If the market pulls back, say for example, and then goes back up to break and take out this high, then I would be interested in looking for a long. But these are major points of interest right here. This is a major high. This is a major low. These are areas that if the market definitely breaks either below or above, then we're going to be looking for opportunity to do what? To go long, okay? But in this case here, anything in between pretty much I like to consider as minor areas of structure, okay? So this being a high, as we were moving higher, made a high here, okay? We were taking out levels to the left, making higher highs and higher lows. We have a high here. The market starts to pull back. And then we go up here and we break slightly above this area of structure right there. It pulls back. All right. This is a valid demand area in which we can look to take a trade going back to the upside. So basically what I would do is once I've identified the market direction, I'm taking trades based on either supply or demand, based on what I see with price action taking place. So structure was bullish here, then it became bearish, but now it looks like we're making higher highs and higher lows, and it's creating structural breaks back to the upside. So I would be interested in if it takes out key areas of highs. It could be minor structure, it could be major structure. In this case here, for example, like this area of structure here, I will look for a pullback to this key area of demand and then take a long position, go along. But I always start with marking up my higher base chart first. Either a supply or demand zone. We're breaking higher here, so it would be a demand zone. And then once it basically retraces back to this case here, a demand zone, then I'll be interested in going long, but moving down to my lower range chart. So as the market is retracing back to the zone, then I'm moving down to my 12 range chart, because on the MES or even the E-mini S&P 500, I'm using a 60 range chart for my higher basis, higher chart basis, and a 12 range chart for my lower range entry chart basis. Okay, so this would be what I would do. Market comes back to this area here. I'm scaling down to say my lower range 12 range chart. Okay, and this day was on, let's see here, that was on October the 14th. So October the 14th, the market will pull back to that area. I'll move down to my lower range chart, and it's way out here somewhere, guys. Let me see. Yeah, it's even further off to the left, out further, so I would have to load some more time, more data. But anyways, as the market would trace back to that zone, once we tap into the higher range, my higher range chart zone that I have marked up, again, mark up your supply or demand zones off of the higher chart. But get the structure of the market correct first and get the direction in which you're going to trade correct so you can take trades with the higher range chart or in the direction of the higher range chart. Pulls back to this zone here. I move down, scale down to a lower chart, my 12 range chart, trading the micro E-mini futures or the E-mini futures, S&P 500. And guess what? Then on the lower chart, I'm looking once we tap the higher range zone to see and wait if it's going to create a bullish move to the upside, meaning where we have a structural break to the upside and the market creating an area of demand to take the trade in the direction, same direction as the higher range chart going to the upside. All right. Here's another demand setup right here. We can see that we're already bullish to the upside. Higher highs, higher lows, swinging and making, pushes higher each time, breaking above areas of structure. Now, as you see here, we have a higher low, another higher low, and then the market comes back, it makes a new high here, makes a higher low, and we break more structure to the upside. So there's a demand zone right there. You can look for the market to pull back to that key area of demand, and once it retraces back to it, mark it up on your higher chart first, then move down to whatever your entry chart is, your lower range chart or lower chart, time frame, tick, volume, whatever it is. As the market is retracing back to it and taps into it, look to identify either a structure point to where the market is creating a high, higher low, breaking structure going to the upside with bullish, demand or momentum to the upside, and look for a pullback to that key area of demand to take the trade in the direction with the higher range chart. Let's look at an example like of a supply setup. So if the market was running to the upside, making higher highs and higher lows, we were in a channel bullish to the upside in reference to market structure, and then we had this final high that the market made. Then we get a low, lower high. It breaks lower and starts to take out levels to the left. So we're getting lows, lower highs, lows, lower highs. This lower high is lower than this high right here. And we continue moving to the downside right here, right? So we're breaking structure as we move lower. This will be a pullback to this area of supply right here on the higher range chart. We'll mark that up right there. Then the market breaks lower, pulls back, taps that area of supply, move down to your lower chart, time, whatever it may be, tick, volume. For me, it's a 12 range chart on the MES, and I'm looking to go short from there. Then the market pulls back even further, and then we could say, okay, or it pulls back right here, but it doesn't take out that high right there. It just basically pulls back. We have a low right here. It comes down, it breaks this low right here, and then now we have a new supply area right here, okay? aggressive selling to the downside. It breaks that low, pulls back, taps the supply area. Move down again to your lower range chart to find a supply setup on the lower range once it taps into the higher range or higher chart supply zone to go short again. All right. So as long as it's doing that and making lower lows, lower highs, pulling back the key areas of supply, you can look for opportunities to go short. That's what I'm looking for. And that's how each and every day I go about, building my account size or growing the account size with my own personal capital. But you can do the same thing if you're trading like prop firms, trying to pass evaluations, or some of you may have funded accounts. You can do the same thing using this, very easy strategy. I call it multi-chart confluence type strategy, using supply and demand, using a higher chart and then a lower chart. So you're using and trying to figure out the bigger perspective of what's going on your higher chart, marking up in reference to market structure first, getting that correct to identify which way to trade and form a bias that way. Once you know which way you're supposed to be trading, the market's reversing to the downside right here, then I'm looking for, a situation or a setup to go short. So I mark up my higher chart first and then move down to the lower chart and wait for the market to pull back. Or as it's pulling back today, higher range zone, supply zone in this case here, I wait for it to pull back on my lower range chart to that area. And then I'll look for opportunity to go short. This is how you can, slowly start to compound your account to bigger profits over a period of time. You're not going to see a significant jump unless you're trading with, you had the capital, all right? I mean, large amounts of capital to trade with. You know how to trade with. You're not going to see something within the first 30 days. If you have a smaller size account, you can definitely grow it. I would say about the 90-day mark, you'll start to see more so of a significant increase from the first month. So allow yourself, I would say give yourself at least 90 days with trading and trying to grow a smaller size account to get to possibly where you want to be at. Even start with $1,000 on the micro E-mini futures. By the third month, you could be into the $4,000, $5,000, $6,000 range if you know how to trade correctly. You're managing proper risk management, and you have a good system in place. If you want to learn more or understand more about the strategy and how I trade, there's a private community. It's very inexpensive. It's only like basically pennies on the dollar a day. I'm not even trying to be funny when I say that. The link is down in the description portion of the video. It's titled Ultra Elite Supporter. Once you click that link, there is going to be a few tiers that pop up. You'll see the Elite and the Ultra Elite Supporter tier. When you click on either tier, it's going to let you know the perks and rewards that you receive for each one. Yes, for what you pay for, you receive. So for example, if you want to become an elite supporter of the channel, all my trade breakdown videos, that's where all like the trades I post over on our Discord pretty much on a daily basis, I go back to that private community of elite members and ultra elite, and I break down my trades so that you understand my mindset, the thought process that went into the trade, in reference to market structure, price action, stop loss placement, profit target areas, and the strategy as a whole. Why did I take it? I break each one of those trades down. And there are tons and tons of those video content there. So the more you spend time watching that video content, things should start to come together for yourself. Okay? I can't guarantee anything to anyone out there because everybody's different in how we look at the markets, our perspective, just as a person, how we go into the market. A lot of people have things that they may slightly have problems with, like greed, fear, FOMO, all that. You got to work on yourself as a trader to become great. Now, if you want to become an ultra elite supporter, you can take it one step up, receive everything I just mentioned, plus the live recorded trading sessions. Okay. Again, the link is down in the description portion of the video. If you want to join the Discord, it is the first link in the description. That's all I have, guys. I really appreciate you taking time to tune in and watch today's video content. If you haven't subscribed to the channel already, please sub by clicking the subscribe button right now. Make sure to turn your post notifications on by clicking the bell. And last but not least, drop me a like on the video if you found value in today's content. And this video here basically showing you how you can grow a small size account into bigger profits over time.